Well, folks, Wall Street is acting like my Uncle Larry after a Vegas weekend. A little hungover, still up a few bucks, but you know the crash is coming. Yesterday, we had this big, shiny Monday rebound. Everybody was high on optimism and overpriced lattes. Today, however, the Dow dropped a 0.5%. The S&P slipped a little bit, and somehow the Nasdaq hit a fresh record, which is like losing your wallet and finding out your crypto portfolio just doubled. It can be confusing. Now, at 12:01 this morning, the US unleashed the biggest tariff hike since 1993 because apparently the Great Depression was due for a reboot. Nearly 200 countries just got hit with duties as high as 50%. That's not trade policy, that's a mob shakedown. Nice little export business you got there. Be a shame if something happened to it. The average effective rate is now 18.6%, which is the highest since people listened to music on AM radio. And automakers, oh, they're taking it on the chin. Toyota says these tariffs are going to cost them $9.5 billion this year. $9.5 billion. That's not a hit. That is a calculated drive by. Now, here's where it gets weird. While exports are crying into their spreadsheets, big tech is out there doing a victory lap. Why? Because Trump basically handed chip makers a Willy Wonka golden ticket. If you build your chips in the US, you're exempt from the 100% tariff. So TSMC jumps 7% because their Arizona plant qualifies. Micron pops 3.4%. Nvidia is up. Apple up 3%, and they're investing $100 billion in the US. Oh my god, man, into US manufacturing. Highly doubt it. They were only had like 92 billion in profit. It only invested like a billion last time, so 100xing their investment, I'm sure. That's right. Apple is bringing some of its iPhones and Apple Watch glass production to Kentucky, which is ironic because the closest most Kentuckians will get to an iPhone 16 is winning one in a church raffle. Now let's talk earnings. Eli Lilly tanked over 14% after their weight loss pill trial disappointed. I mean, it's 2025. People want instant abs from a TikTok filter, not slow science. Duolingo shot up 17% because apparently everyone wants to learn Spanish before they move to Mexico for cheaper rent. But it gave back some gains after OpenAI's GPT-5 started doing instant translations. Fort Fortinet down 22% because corporate IT budgets are tighter than a TSA pat down. And then we also have the Fed drama, a reality TV edition. And then we have the Fed. Adriana Kugler resigned and Trump appointed Stephen Myron to the Fed board. And guess what? Bloomberg says Christopher Waller might replace Jerome Powell in 2026. I love how they talk about the Fed chair like it's The Bachelor. Who will get the final rose and tank your mortgage rates? Meanwhile, gold jumped almost 1% on hopes of a rate cut and fears that the tariffs might actually break something important, like the economy, maybe. And then crypto got a sugar rush. Bitcoin popped nearly 2%, Ethereum up 4% because there's a rumor Trump might allow 401k plans to invest in crypto. Finally, grandma can close her retirement in both stocks and Dogecoin. And then behind the scenes, whales were making some serious moves. Apple saw 20 million in bullish options flow. MicroStrategy pulled in over 12 million because Bitcoin bros never sleep. But they weren't just buying; they were hedging like crazy. The Russell 2000 and S&P 500 both saw massive put buying. It's like they're saying, sure, we love tech, but we also think the rest of the market is a flaming dumpster right now. The weirdest trade of the day, a 1.23 million bet against Palantir that's due in 2026, which just had its first ever billion-dollar quarter. That's like betting against Taylor Swift mid-tour. Now, what does all of this mean exactly? So here's where we are, folks. Bulls are crowding into US-based manufacturing, AI chips, and mega cap tech. Bears are hiding in gold, crypto, and index puts like a doomsday prepper with canned beans. And the rest of us, we're watching the market like it's a soap opera. Thursday's the big tariff D-Day, which was today, and that could be the episode where the hot guy gets killed off, or, the economy in this case. And it looks like that may have happened today. So don't marry your longs, don't panic sell your shorts, and whatever you do, don't believe anyone who says they know exactly what's going to happen next. Because if the last 2 days have proved anything, it's that the only predictable thing about this market is that it's completely unpredictable. If you made it this far, make sure you like, subscribe, and hit that bell notification so you never miss a Trades and Gains update. I'll see you guys in the next episode for our midday options flow tomorrow, and have a great night.